Hello, everyone, and happy Friday. This is Tom from MarketsFlow. It is the 15th of November, and we're recording this partway through Friday as we bring you the weekly performance for the week ending 15th of November, 2019. I'm here with Adam. How's your day been, Adam?
I'm fine, thanks, Tom. Still pushing on, helped by strong markets, strong coffee.
Great, sounds good. So let's get started. This is the Webcast 29 for MarketsFlow's portfolio performance for the week ending 15th of November. Our podcast is recorded every Friday and is uploaded immediately on YouTube. Please subscribe to our channel so that you can receive it as soon as it's available. MarketsFlow is an FCA authorized robo-advisor and digital wealth manager. Your deposits are protected by the FSCS for up to 85,000. Go to marketsflow.com to learn more about our portfolio performance. You can download our mobile app on the App Store or download it on Google Play Store. You can sign up and start investing from £10. Before we start, I'd like to run through our disclosure. Your capital is at risk, and any financial performance figure referred to the past and the past is not a reliable indicator for the future. So having said that, let's cover the important subject. How have our portfolios performed this week, Adam?
Well, up to now, and as always, we're not recording this end of day. We're part way through Friday with a few hours to go before the market closes. But as of now, high growth portfolio is up 0.68% this week, and that means that since the launch at the start of June, we're up 7.98. The same two measures for the growth portfolio are 0.7% this week and 7.91% since that early June launch. And for the ISA portfolio, up 0.71 this week and up 5.22 since the launch.
Great, thank you. And how have the markets performed as a whole this week?
Well, at the same time that I measured those portfolio figures, the market, as captured by the S&P 500, was up 0.65 in the week so far. Like last week, the index punched some new highs, but stayed in a very tight range. And just to show how tight, even though the last couple of hours as we've risen, we've widened that range to the upside. Even now, the market has spent the entire week so far within a 26-point range. So in a market that's got an index value of about 3,100, that's rather below 1%. And volatility, as embodied in the VIX index, is down at the very low level of about 12.3, 12.4. There's only been a small handful of days this year when the VIX has closed below this level. So, very low levels of VIX. And as usual, that's reflecting what's been a market in a very tight range.
You're right. VIX are exceptionally low. So what about the allocations within the portfolios?
Well, portfolios were a little bit more allocated this week than last, with once again all the action being in stocks, nothing in options. Peak allocation was around 45%, maybe a touch higher. The average for the week being about 30%. And as I said, all in stocks, no options.
Great. And just to emphasize, we're looking to launch those allocation figures in our app, hopefully within the next 2 weeks. How were the portfolios risk managed through the week?
Well, I'm going to sound a bit repetitive saying this. I've said it quite a few weeks recently, but low volatility market, but with some decent amount of dispersion across the stocks, more than you'd normally expect at this level of volatility. So the most fruitful area to generate returns was stock picking rather than trying to time the overall market or use options. So the focus was on that. Plus, as usual, setting stops for both the gains and for losses that were, those stops were set appropriately and proportionately, and being willing to exercise discipline, close positions as per our process and not hang on unnecessarily.
Great, thanks, Adam. And what do we need to look forward to from here on for the next week or two?
Well, earnings season now being passed behind us pretty much, we now see a fairly busy calendar of GDP releases for the third quarter, some of which have been released already, and there have been a few interesting outcomes so far. UK avoiding recession by some distance, Germany doing so by a lesser amount. A lot of countries still to release. As the growth data and other more forward-looking evidence builds around the world, this begins to help to illustrate how much scope or how much need there may be for central banks in general to ease policy. There'll be some focus on watching the words used by central bankers, both in the text of their policy announcements and also in the individual speeches, with further insights hopefully being visible there for those who watch central banks. That should generate quite a few of the news stories. The Trump and China trade story goes on making headlines, and so too do a number of other issues. The UK, for instance, at the moment mostly making news about the upcoming election.
Great. Thank you, Adam, for those insights. So that brings us to the end of our podcast. Thanks for watching or listening to us on YouTube. Please remember to subscribe to our channel. Have a great weekend, and we look forward to our next Friday's podcast. Take care.